me a nod if you can hear me. No, I always ask, but I like to double check. It's nothing worse than talking and rambling on, getting all excited about things, and then you realise your microphone's off. We've only done that once, to be fair. We've done these webinars a while now, but we've only done that once so far. Sound is good. Thank you to you three. Do you know what? When I kind of sit here and look at put the webinar, I put the camera on this, it's one time I go, you know what? You need a haircut. You've been sitting here watching price, like a caveman in your trading office. You need to get a haircut. How funny that it takes me sitting here and putting the webcam on to go, man, you could a little bit disheveled there. But so you'll forgive me if I do need a haircut. I do, and I will have one this week. I'm sure you care about my my barber routine, don't you? Anyway, today, good to see you guys. Let's have a look who we've got in the house. Who have we got in the house? Attendees, that's what I want. We've got the regulars, Aaron, Arthur, Andy, Anthony, Batten, Beth, Chris, Karen, Christoph. How you doing, everybody? Errol, George, Jeffrey, Justin, Lana, Lee, Leslie, Luke, Marinus, Mark, Minhart, Norbert, Pamela, Pat, Patricia, Paul, Perry, Pete, Peter, Rhino. There he is, Rhino, Rob, Robert, Roxon, Samuel, Susan, Sven, Thomas, Toby, Julia, Vas, Ilsa. I mean, you know, I tried my best. Sorry, pal. Right, let's get straight into it. Good to see you, as always, ladies and gentlemen. This evening, we're going to get straight into the thick of things. Markets-wise, I mean, we had a little bit of action, didn't we, last week? It was super spicy today. I think we're just waiting around. We've got non-farm payrolls tomorrow. Is that the infill data? I think it is. Loads of earnings coming up this week as well to look out for. Yen is spicy. That's obviously because of the whole political thing and the PM and stuff that was over the weekend. So that's driving that. Trump's gone a little bit quiet, worryingly perhaps. Who knows? I think it's a calm before the storm. Let's just see what the earnings do. Everyone is waiting to see if the AI bubble is going to burst. Software stocks are getting battered. We know this. There's a lot of stuff going on. We just need to kind of shift out of this. Now, Dow's obviously flying. Dow is happily trading well 50K on the futures. Nasdaq still lagging. Is that a big shift round? Gold and silver volatility crush as to be as expected. Oil, I think, is just waiting to see if Trump strikes Iran or not. Yeah, let's just see what happens. And obviously sterling, let's wait to see if anything happens with good old Keir Starmer. Yeah, the less said about that, the better. Okay, so this evening we are talking about why good strategies fail good traders. Well, great quote by Epictetus here. You know, I love these quotes, guys, the daily Stoic quotes, or Stoic quotes, I'm sorry, daily Stoic quotes. It's impossible for a man to learn what he thinks he already knows. And so very apt in trading is, you know, I think the more experience you get with trading, the more you realize you don't know it all, but that's okay because you don't have to. There's more than enough opportunity in your little area. And the way I kind of visualize it is like you're a big swimming pool, right? A big 50-meter pool, Olympic pool, and you kind of, there's sharks at that end. I mean, sharks in the pool, but you kind of got these big fish at that end. But because the water's so deep, you only have to kind of protect your little area by the side, and that can be your zone, and you can get a lot out of it. There's more than enough water and opportunity, and when I'm talking about trading, of course, to not know what's going on the other end of the pool, not care, but just becoming very, very good and skilled at your little area of expertise. So I think that's very important in trading to consider that. Okay, that's why I'm flicking around here on my webcam. Who cares? You can see the slides. Let's get rolling. Wait a second. What's this flagging up now? Of course, GoToWebinar wants to update stuff. Of course. Why would it not? Does it not detect a mid-webinar here? Do you want to update your hardware? How about not right now, GoToWebinar? But thank you for that. Thank you for your prompt timing and really perfect timing. Let's get to it, ladies and gents. Right, and we'll get straight into the thick of stuff. A lot of stuff to cover this evening, and I think this one's going to help you a lot. But disclaimer, of course, first, spread bet CFDs, margin, leverage, double-edged sword, as I like to say. You're all very pleased and happy. You've got lots of leverage when things are going your way, but they always don't always go your way, and you're always going to get hurt the most when you are leveraged up more than you really want to be when stuff goes against you. So losses can happen fast. Just understand how leverage works with a spread bet product, a CFD product, or any financial instrument, to be honest with you. And just make sure you are managing risk effectively. You're using stops. You are doing all this type of stuff. I don't know why I go to when I was doing this. So we might flick the webcam off. We'll see how it goes. But yeah, disclaimer, of course, you understand the risks, guys. You do. If you don't, if you're new here, then please just make sure you do. And I have to say this. I like to say this. I don't like to see anybody losing because they didn't understand the risks. If you lose because you took a trade and you kind of understood the risk reward ratio and the trade-off, you took it, didn't work out, well, that's trading. But if you went in and you kind of didn't realize what you were doing and didn't understand leverage and margin, then things can get a little bit unfriendly. Okay, so just double check you're doing that. Okay, this evening we're not talking about strategies per se, but if we do, I always want to say, listen, this is coming from a place of educational purposes only. Don't go out there and start copying things that I say, because you've got to make your own decisions, go on your own journey, and make your own judgment for things. I'm just going to double check. Okay, yeah, we're good. Right, let's hit the ground running, ladies and gents. So we are in week, I want to say 6 of the Traders Operating System. We talked about a lot of strategies in January. Deep dive into those. I gave you some resources to go and explore more if you wanted to. Trends, momentum, mean reversion, news trading, traps. Got a lot of trap. So there was all that kind of stuff. And now this week we're kind of trying to work out, which strategy is going to fit you. And today we're answering, should I say, the key question. Let's just go back to this. Why do good strategies fail good traders? And hopefully we'll get the answer for that by the end of this. And we're going to cover some stuff that we've covered before and go into a lot more depth on that. But very often I see a lot of traders who are pretty competent and pretty good, and I kind of look at it and go, what you're doing, right? You are pretty knowledgeable. You understand the markets, you understand supply demand imbalance, you understand the auction process, you understand price discovery, you understand the concept of volatility expansion, contraction, you understand the ideas of who's on the other side of the trade, trap trades. You get kind of the basics and well, that's not basic stuff, is it? You get the nuances of price, but things just aren't quite working. And in fact, the strategy, I've seen other people do very well out of it, and maybe it's been an effective strategy for me, but there's just a mismatch, and you go, well, why is this? And so hopefully we're going to get to the bottom of this today. And if this is you, if you're like, hang on, I feel reasonably competent in trading, and I've got a strategy that I believe to be effective, why do I not get the kind of outcome that I really want? Hopefully we'll answer that today. So we're going to talk about strategy and trader mismatch, a little bit taken from the previous webinar, but going a little bit deeper. Execution drift and context blindness, over-optimization at the wrong stage, and then strategy hopping disguised as learning. So these are the kind of the 4 main things that I've come up with that I believe is when a good trader and a good strategy, they just don't mix for some reason. It's like having 2 magnets, there's north and north, and it's just like, it just doesn't fit together. And and the harder you try, the further away the goal gets pushed. And you know what it's like in trading, guys. You have a good run, you stagnate for a bit, you try to push a little bit more, you end up doing damage, and all that does is frustrate you because you're pushing the consistency goal further away. You're kind of doing damage to the account. You're maybe undoing some of the work you did before, and you're kind of like, this is double frustrating. I felt the euphoria and the excitement of feeling confident and relaxed about my trading, and now I've gone back. I feel like I've gone back to square one. Just a little point on that, if I may. Try not to judge yourself too harshly. We are our own worst critics. We always are. And of course, anyone listening to this, you, me, we drive ourselves hard. It takes a certain character to want to get into trading and specifically come on something like this and join me when we're talking, about the intricacy of trading, the nuances, and trying to improve. You want to do better. You're ambitious. You're driven. And so you've got to be very careful, not sit on the couch drinking a beer and not worrying, you know what, I'll just trade what I want tomorrow. You're making some progress and trying to do some homework, if you like, extracurricular work to improve your trading performance. And that comes from a place of ambition. That comes from a place of drive. But the point is that can very often work against us, right? Very often we can we can drive ourselves too hard. We can force ourselves to be or want perfection when we really don't have perfection. And that is detrimental. That is really detrimental. And actually, you need to take a step back and look at the bigger picture and go, yeah, you know what? Maybe I'm making a few mistakes at the moment, but actually look how far I've come. Look how far I've come. And I can't force immediate kind of performance. I can't get exactly what I want right away. It's a journey. It's a process. And I know it's cliche, enjoy the process, enjoy the journey, but it's so true in trading as well. So if you find yourself, I've gone off piste a little bit here, but if you do find yourself really struggling mentally, so to speak, or driving yourself too hard and being too hard on yourself, just know that being a little bit more calm and a bit more compassion, it actually gets you better results. And you might not think it, because a lot of places outside of trading, it doesn't. Drive, do more. But in trading, that's so counterintuitive. It's about the decisions you make. It's about creating an environment that is conducive to making good decisions. And so that involves stuff like taking care of your health and going to the gym and taking care of your diet and making sure you're sleeping. It's never going to be perfect, right? But trying to do that and saying, hey, you know what? I'm not at the screens today, but I'm doing that because I'm trying to improve my decision making. So when I'm at the screens, I'm making the optimum decision. And that's very different from sitting there grinding away, your eyes bleeding as you're watching every single candle. So something to consider. We've gone off piece, but let's carry on. Hopefully that makes some sense to you, guys. All right, so let's talk about strategy mismatch. I keep getting this annoying little thing popping up, but hopefully it's fine. I'm sure you'll tell me if we're not working all right here. So strategy mismatch. We've covered this before, but one more extra layer of depth. You know, this is a big thing, and so often we kind of get this wrong. So just to recap and kind of go into a little bit, look at it from a different angle here. You know, imagine the different psychological profile. And the reason I want to dig into this again is because I really hit something. A lot of people emailed me and said, you know what, that resonated with me. I feel like I'm going down the wrong path here, and despite maybe it working, this strategy doesn't fit me. Or another email from someone saying, yeah, you know what, I'm trading part-time, I'm trying to fit it around my work. I'm trying to get this work-life balance, so to speak, or at least a trading work balance, and I'm missing stuff, and it's annoying me, and I can't. It actually made me think about being more clear about what I'm doing. So I feel like this is moving the needle for some people. So we'll dwell on this for a moment. So scalping, obviously, fast decisions, emotional. You got to be really centered as a scalper. If you start thinking up too much and overthinking the decisions, then yeah, you know, you end up second guessing stuff. And you've got to be comfortable sitting through noise. You've got to be comfortable sitting on your hands. You've got to have that. You know what scalping is all about. Swing trading, patience, tolerance for drawdown. You have to, not necessarily, but maybe so drawdown, perhaps a trade's going your way and it comes against you a little bit. You've got to be happy sitting with that to get the kind of full meat of the move. You don't want to be involved all the time. Sometimes your goal is to get your position on and then sit on your hands. There's a certain type of character that prefers doing that. And then we're talking about actual operational stuff. Mean reversion is, okay, you're going against the grain. The market's moving up high. You think it's going to reverse. So everyone is thinking the other thing at that moment in time for that spring contraction, expansion, contraction. I mean, I'm generalizing, but you get the idea. And then breakouts, you're comfortable buying at highs and possibly being frequently wrong. But when you're right, you get an absolute monster. Again, generalizing is not always like this, but the idea here is that you know, you're mapping and matching the trade technique and strategy to the psychological profile that you've got. And a mismatch looks like an impatient person swing trading. I said that loosely. Cautious trader scalping, you've got to be kind of reasonably aggressive as that. But a validation seeker, trading counter trend setup. So, you know, there's so much more depth to this. And, you know, I'm not a trading psychologist by any stretch of the imagination. You know, I understand psychology deeply from a trading aspect of my own psychology and working with other traders and understanding that. But the kind of neuroscience that goes into it, that's, you know, another realm, another study altogether. But, you know, the profitable system won't work if you just are struggling to take it and struggling to feel that it's comfortable. So lifestyle and strategy, you've got the common mismatches, of course. If you've got a full-time job and you're trying to intraday scalp, it's not going to work. If you are a parent and you've got interruptions, then you're only going to be frustrated at your kids. They're coming into the room, you're like, I'm trying to get an entry here. You've got to do something about it. You've got to manage that and decide how you do that. Do you manage that by saying, I've got certain hours where you don't come and interrupt me, or do you kind of adjust and have slower entries that aren't so sensitive to milliseconds? Because you know, if you're a parent, you know the moment you've been waiting patiently like a good boy or girl, and the market's coming to your level, like, here we go, this is it, I'm waiting for this sucker. You've been waiting to click that button. There'll be a dad or mom, can I have this, can I have that? And you know the timing will be perfect. The timing will be perfect. And you can't let that interfere with your trading. Of course, you want to be there for your children as well. If you are a parent, if you're not a parent, then you may have this to come if you are on the way to that. So thinking about that, and thinking about obviously regular schedules and time of day strategies. If you've got a regular schedule and you're constantly trying to trade the open, it's just going to annoy you. Okay, so now let's talk about risk tolerance. So, and we'll run through this relatively quickly to get to some of the newer stuff. So risk tolerance versus strategy. Now, some strategies do feel painful before they get going. You know, if you're a mean reversion trader, timing that is often not that easy, right? You kind of get the stretch and you kind of have to sit a little bit more maximum adverse excursion versus a breakout where you kind of want to be right straight away. Otherwise, you don't want it. Mean reversion, you obviously got to stop there, but you might end up sitting with the trade against you. Then it finally curls in. As an example, you know, a trend strategy, you're going to have periods of time where you get stop. Then you catch a trend, great. You got a multi-day run or whatever it might be. And scalping is you going nothing. All of a sudden, it's coming down to a level you want to scalp around. Very, very aggressive on off. So you've got to be very good at coming on and off the throttle. And the problem you have is if you can't sit through either the risk profile, if you like, of the strategy, you are going to second guess the strategy. You aren't going to, and this is where we say a good strategy that is not going to work for you because you will second guess it. You will cut the winners because you feel uncomfortable. You'll move the stop because you want comfort, and actually comfort is then at the expense of the efficacy of the strategy. You will skip trades, maybe because you don't want to take them. You feel like it's risky. But sometimes those are the trades that you skip are the ones that actually give the positive expectancy to the strategy. Okay, one extra thing to consider here is your skill level versus strategy. And this is not really talked about, and let's be honest, this is pretty valid. You know, some strategies just require a level of screen time and skill that you may not have yet, and that's okay, right? It's like saying, I know I always go to this, let's use a pilot analogy, right? You might be a pilot who can fly a little two-seater Cessna. That doesn't mean you have the ability to fly an Airbus A380, right? It's flying, right? But it's very different. You have to build the skill over time. And it's not me saying, oh, look, you know, we're advanced traders and stuff. It doesn't guarantee anything, but there are certain strategies that you may not want to deploy because it's a skill you're developing. Example might be, you know, tape reading. Tape reading is something that you build up over time. You're watching the market depth, you're watching the price ladder. Maybe you dumped all that and you're just watching, you know, price movement and price change, and you're kind of feeling the tape from that. Is two kind of definitions of tape reading there. I put discretionary entries in here because, you know, whilst that's not particularly advanced, you do have to have higher skill level, right? And you know, as you go through your trading journey, the more you understand about markets, the more you understand about supply-demand dynamics, the more you understand about the auction process that is going on behind those candles, the more confident, the easier, the more confident you are about making those discretionary decisions. Yes, I feel like buying this momentum candle because the context is good. And that's another thing, right? You become much better and more aware of the context as you become more experienced as a trader. And this is good news, by the way, in that the more screen time you put in, and I don't mean just sitting in front of the screen clicking away, but the more you absorb about the markets, the more you learn, the more charts you print off, just the more you go through that journey, the better your context decision-making process is going to be, the better your ability to read tape is going to be, the better your ability to just have a discretionary entry and know why it doesn't feel right for you. The intuition and judgment just improves with screen time. It's a linear progress. Now, it doesn't necessarily mean that your equity curve is going to be linear, but that does mean I think the skills are linearly grown linearly with your kind of screen time and experience. So have a little think about that. Like, are you trying to trade something that maybe you haven't got the skill level yet for? Now, of course, you want to trade it to improve the skill level, right? If you're trying to build up context on price, you're trying to get better at discretionary entries, you need to practice those. But you, going back to the previous point, you can't be too hard on yourself if you're not getting it. Like, you know, jumping, if I jumped into an Airbus A380, yeah, fine, I could fly a little plane, but I'd be like, right, okay, I don't actually know what I'm looking at here. I understand my mechanics of it. I understand I've got a yoke, I've got a rudder, but apart from that, and there's probably even a yoke, right? It's probably a joystick. I don't even know what it's like in that. You get the point. It's like anything. So just remember, I know you guys are more, maybe not quite new traders, but developing traders, and this is to kind of a selection of traders along the journey. Just be careful you're not trying to get more out of a strategy than there's a skill gap missing. It's not say you can't fill the skill gap, but just be mindful and say, hey, I need to simplify things a little bit. Okay, this is a really, really good one. Really good one. So a lot of traders do not believe in what they're trading. And what I mean by this is, and who knows where these beliefs come from, right? Maybe they've been developed as you've been learning as a trader. Maybe you've been burnt investing or trading. You've tried trading before, whatever it is. It almost doesn't matter to a certain extent. But a lot of traders believe things to be true, whether they consciously recognize it or whether it's just deep in the subconscious. For example, a lot of traders just don't believe breakouts work, right? And they've always in the back of their mind say breakouts never work, right? Always fake outs, always fake outs. And that's maybe reinforced, the belief's been reinforced over time, and yet they're trying to trade a breakout strategy. And what they're doing is they're trying to quieten that voice down, even though it may not be loud, it's always there going, this not. And so you're not going to trade it with the same confidence as a trader who goes, you know what, sure, the hit rate on breakouts might not be high, but when I get on one, man, I'm going to absolutely milk it for all it's worth. Now that you trade exactly the same strategy, maybe you got exactly the same experience level, and this is like whether good traders, good strategies, things are mismatch. Which trader would you bet on having the best performance over, you know, a quarter trading a breakout strategy? The trader who doesn't really think that breakouts work and actually fake outs are more often than not, or the trader who goes, you know what, when I do get on one, they're beautiful. Which would you back? Of course, you've got to back the guy who's got the more confidence in the vehicle and the strategy they're trading. So, you know, just really think about that and dig deep and go, do I believe this to be an effective strategy? Because if you don't, you know, this is kind of deep stuff now, but this is stuff that will help you if you can identify it. You know, maybe this is another thing about, you know, we'll be talking about discretionary trader versus a purely mechanical trader. So, and this is very common, actually. I see this with a lot of traders, and it's a quick fix, to be fair. It is a quick fix. But a lot of traders want the idea of operating an if-then statement, like a binary. Well, if this does this, I'll do that. If this does this, I'll do that. A kind of flow chart, if you like, a system, a rule-based approach is probably the right description here. But they're constantly overriding the rules. Now, the immediate response to that is discipline. It's a discipline issue. And I would agree to a certain extent. And discipline is super important. We have to be disciplined. If we've got rules in, then we should be following those rules. But there's one extra layer to it that's often not considered. And that is that maybe you don't believe that a systematic approach can work. Deep down, you think that actually, you know, for edge, for efficacy, for positive expectancy, there's got to be an element of discretion involved. And so every time the system comes up and it says, well, if this happens, I buy this, I buy the 10-day breakout and I pull back to this, and you don't pull the trigger, it might be a discipline issue, of course, but it might be that you just genuinely don't believe that this is the right system to trade. You want to have some discretion, in which case you can fix that. You can layer in a little element of discretion. You can have rules that guide you. Hey, I'm only going to trade an oversold condition to the upside, blah, blah, context in here, within the prior day's range, you've got no data coming up, all the rules that you want. And then you say, well, actually, I choose with that 15-minute candle when to pull the trigger. So you can still have the rules to guide you and keep you on the straight and narrow, but ultimately, you know, you have that element of discretion there. We talked about that as well. Over time, as the more experience you get, the more discretion you have, and the fewer the rules. They're probably more risk rules, and then everything else is kind of, well, I'll trade what I see and I'll trust myself to make the right judgment. When you're developing, you have more fixed rules and smaller discretion. And just one more point on this. You might think that rules save you, but if you're constantly breaking them, they're useless and they're more dangerous, Because actually what you tend to do, and I'll dwell on this for a moment, I'll make no apology, is that what we tend to do is we go, okay, the rules are here, and once they're broken, and if you've got so many rules and you're so shackled by rules, once you break one, it often opens the floodgates. And then you break more and you break more, and you've got much more of a higher chance of doing something silly or going on tilt and doing some real damage to the account, versus someone who says, I've just got a risk rule, everything else I'm a bit flexible with, and you haven't got a rule to break. You've got the risk rule, fine, you get that, you're in kind of big trouble if you break the risk rule. But you can make a trade and you go, well, I didn't make money, but it wasn't because I broke my risk rule, I just misjudged it. And so you frame it differently. And so sometimes, not for everybody, sometimes the chances of doing massive damage when you've got much more discretion is less than someone who's going to do damage when they're rule based. Because if they're breaking the rules, that often cascades. You know, like if you're trying to lose weight, right? Sometimes you go, oh, I'm going to try and lose weight or whatever. You have a sneaky little chocolate bar that might turn to 2 or 3, and the day's gone. You're going to actually have had 3 chocolate bars really, and that's 750 calories I really did not need. We've all been there and done that at some point, and this is human nature. Sometimes we're going to throw the whole thing under the bus because we break the armor very slightly. And so what I'm trying to say is sometimes the armor works against you. So just something to consider in your brain. The final thing is trading discretionary but craving certainty. Some people struggle if we flip that on its head. Some traders struggle to make a decision in the heat of the moment because they don't know if it's the right decision. Now, you still don't know if it's the right decision if it's a fixed system, but you have certainty around the system tells me to do this. I need to buy the close of this bar after it's gone above the bull flag. Okay, done. Your brain is wired that way. So work out how your beliefs and logics are aligned. Otherwise, you will constantly sabotage stuff. And like I say, I'm not saying that we don't have to focus on discipline and stick to rules, and we should do, but sometimes it's a little bit more complicated than that. And I would say if you're a person who's been kind of struggling and breaking rules persistently for a long period of time and constantly find yourself doing stuff you don't want to do, and you've worked on your discipline, you've psychology courses, you've done this and done that, you might just want to say to yourself, am I just going down a path that I need to adjust? Am I forcing myself as a person and my personality into something that okay, I'll get there in the end, but why play the game on hard mode? There's plenty of other avenues to take. So maybe I need to adjust how I'm trading and what I'm trading. All right. Spent a lot of time on that, but I think that's important. Okay, so now let's talk about another thing that could be the kind of break point between good traders and a good system, a good strategy, if you like, is what I call execution drift and context blindness. So execution drift is when a trader thinks or believes they're trading the same strategy, right? But over time, you start to just adjust the entry a bit. The exit adjusts, maybe a little bit of size changes, and the rules slowly drift. And it's not a big decision where you've gone, oh, I'm just going to trade this and that. But the accumulated drift ruins the expectancy of the strategy. And we'll get there in a moment, but you kind of put it under the guise of, well, I'm just making tweaks and making adjustments. But actually, you're not trading the strategy that has the positive expectancy. You've gone past the core feeling of uptrends. I'm going to buy an uptrends. I know that's got positive expectancy. Here's my pullback strategy. To now you're kind of adjusting it, adapting it, tweaking it, and you've got this execution drift. The entries get a little bit earlier, and you go, well, I'll just pull the trigger now before the bar closes. You kind of widen the stop because you don't want to get stopped out, as opposed to widen the stop for justification of volatility expansion. Your targets get reduced because price feels a little bit heavy here. You're adding a layer of discretion into it that you hadn't planned for, and so you get this strategy creep. And so rather than planning for it and going, okay, actually, you know what, I need to make these considered adjustments, you're now trading a new strategy that was way different to the one that you went out for without knowing it, and you don't know how effective that is. And I get there's a balance between making adjustments in the context of the market, but we shouldn't be adjusting strategies massively. We should be saying, this is a mean reversion market, these are my mean reversion plays. This is a trending market, this is my trending momentum plays. Or you just don't get involved in them. You say, trending market, I trade mean reversion, I'll leave it. You shouldn't be adjusting what's reasonable, effective strategy, mean reversion strategy, to accommodate the conditions you're in. I think that's where it gets dangerous, because fine. If you're super advanced, you might do it, adjust it, bring it back to kind of center. So why do we do this? You got emotional residue from recent trades, and so you have that recency bias. Oh, that last trade ran a little bit, so I'll wait for this. Or you get overconfidence after a good run. You're trying to avoid loss, so you think that tinkering with the strategy in the playbook is going to avoid loss. This is human nature. Don't beat yourself up. You think that the more rules and the more tinkering, the more adjustments means the fewer losses. It just ain't going to be the case. Or you're bored and you're just kind of trying to get more trades under your belt because of boredom, which we all know ends in tears, right? So context blindness is the next one. When we talk about a strategy, we often talk about a rule-based approach or a broadly rule-based approach. And we can give that example of, the exhaustion flush on the daily charts that we talked about. Even John Bollinger's thief setup, that's very, very rule-based. There's a context that comes with those. You're trading momentum ignition. You want an environment that is exploring higher prices or lower prices. Maybe that is catalyst driven. Maybe it's broken out of a specific range. And if we're blind and we don't assess the context correctly, it doesn't matter how good the setup is and the strategy is, you're trading in the wrong environment. And so, I know that I talk about context a lot. And it's very difficult for sometimes to kind of articulate what it means. And we kind of talk about quantifying it with the price position and the intraday range, and maybe if there's a catalyst, maybe if anyone's been trapped beforehand, what was the overnight range, what's the gap, what's price done, where's the VWAP. There's loads of stuff that kind of apply to context, but in reality, guys, you can use rules to guide you, but this is where experience and judgment comes in. And you go and say, hey, you know what, maybe we are at lows and stuff, but we've just had the context of a complete shift in narrative from the president or whatever it might be who's tweeted. And that trumps everything. Nobody cares about where the VWAP is. He's come out and said this. The market is reacting to that, as an example. Or you might be like, okay, well, yeah, maybe we are out here and it looks like a momentum ignition candle, but everyone's waiting for NFP, so I'm not going to take it. So context assessment is screen time. It really is. And so recognizing that blindness of context can really cause problems. Examples: taking breakouts when you're in low volatility ranges, trying to fade moves during strong trend days, trading mean reversion into news expansion, and using the same rules in vastly different regimes. It's not the setup that's failing, it's the context that's invalidating it. I'll give you an example. We talked about, I'm just double checking my pace, it's good. We talked 3 weeks ago about, I think I sent an email, I think we're talking about the exhaustion reversals, and one of the things I said was, gold and silver, the metals, are really explosive now. At some point, the play will be an intraday reversal play on the short side, but the context of that matters. If you just went into every day trying to short every day, you're going to get smashed because it had 2 or 3 day more of spike. But then when you had the context of we had the gap up, it's failed very early on in the Asian session, and we get selling in London, we get selling in New York. Now all of a sudden, despite the official context of we're in an uptrend being, where we are, the true context and the one that adds more weight to the trade is the fact that it's super exhaustion and there's a massive rug pull going on. And of course, a couple of days, we saw these massive sell-offs in gold, which were counter trend, sure, but it was context about when to apply those that kind of mattered. Okay, so so this happens because often we get really addicted to a specific trade, and this happens as well if you've had some kind of good a good run in trading, right? And you've been using some specific strategy, and you kind of keep pushing that strategy. Because it's worked. You're doing it because it's worked before, and that's correct, right? We should push. We should get the throttle down when things are working. But very often we don't recognize when context shifted. And listen, I know you're going to say, well, how do we know? We don't. It's very difficult to judge. Is it just a slight shift in context? Because the market, even if it's ripping to the high side, will have days where it calms down and does a pullback. And so your buys there are going to get stopped out. Does that mean you stop doing it? Probably not. But it's just, understanding the nuances and the gray in the middle. And over-reliance on checklists. I'm a big fan of checklists, by the way. But again, I'm a better fan of discretion and judgment and nurturing that. and treating the markets as kind of a static rather than a dynamic thing. They're living, breathing, they adjust, and they can shift from kind of, you know, static volume contraction to expansion intraday. We see that all the time. And my brackets are all around. No one's noticed that, have they? And ignoring regime shifts. Like, markets will shift from volatility expansion to contraction to backfills to range bound to price exploration. You know, again, I think that the key thing here is to, here's something that will help. If your North Star for development, not necessarily your strategy, is I just want to build my ability to perceive price. I want to improve my judgment. I want to improve my discretionary trading abilities. If that's your North Star, then all of this comes under that. And you can break it down if you want to, if you learn like that and say, well, I want to get better at understanding the daily chart, the context, the narrative, the market's engine. I want to get good at doing that. I want to get good at understanding how the prior pre-market action, the prior day's action, this is all adds up to it, sure, but it all comes under the umbrella of improving your ability to understand the context we're in and your element and improving your discretionary abilities, your judgment, your experience with price. If you can do that, and then everything you do will compound and compound and compound. Okay. Another way that often these things break good trade, a good strategy, is over-optimizing too soon. Super common thing to do is you go, right, well, you know what, the strategy's doing okay, but I can make it better. I can make it better. The question you have to ask yourself is this: when you have a strategy that's working, let's say profitable strategy is doing well and kind of helping your equity curve better, grow better growth, you know what I mean? The default setting for humans and traders is, how do I optimize it? How do I tweak it to improve? The answer may be you don't need to tweak it. The question you have to ask yourself is, why am I tweaking it? And the answer will be, so I can make more money from it. Well, maybe the other angle is to just do the size game and trade more size. And I always ask this to traders when they say, I want to do this and adjust this and hold the trade longer. I'm like, it's working. Why are you meddling with it? Well, I want to get back. Okay, if you'd made 10 times as much as you have now on that strategy, would you be wanting to tweak it? If you made 100 times as much as you made on that strategy last quarter, would you be saying to tweak it? No, you wouldn't. So the drive to optimize a strategy has come from your perception of the results when you're looking at the results from a P&L perspective, as opposed to an equity curve perspective, if you like. And so you're trying to ruin something that's working because you want to get more out of it. And actually, that might be absolutely perfect. And the way to get more is to go down the size increase in group, which is a different topic, a different discussion. I appreciate, but that's often what traders do. And they over-optimize something and go, oh, do you know what? I end up ruining it. Or you're doing it too early. In this case, where you're saying, oh, you know what, it's going to right, but I want to do this, I want to do that. Stick with something for a while, soak test it, see how it performs in different market conditions, and then intentionally consider decisions. Say, hey, I want to improve. I think this strategy can improve its entries because my maximum adverse excursion is a little bit too high. I've seen it going a little bit higher, i.e. how much price goes against you before it goes in your favor. I think I can improve the entry. I'm going to make an adjustment that gets me a little bit later, or whatever it is, right? So just thinking from that. And what this might look like in practice, you start tweaking adjustments after a couple of trades. I'll hold it a little bit longer. I'll do this and do that. You're curve fitting to recent poor performance. Go, well, if I just didn't do this and didn't do that, that would fit what the markets were like yesterday and last week. Well, yeah, genius. That doesn't count. You want to try to get something that's effective moving forward, not something that was effective. I can tell you the perfect trade on the level 2 I bought out yesterday and the day before and the day before. I'll just go and look at the chart and I look at the low and say, well, you know, if you bought that low and this was doing this and doing that, it's not effective. Adding more filters to fix the uncomfortable feeling you feel, discomfort, changing all these stops indicators and running back tests instead of forward testing, building the reps on it and saying, hey, in practice, it's very difficult for me to judge where that exhaustion candle ends. I might be an absolute frigging genius in hindsight. Oh, there's an obvious exhaustion candle. I would definitely trade out there. There's a little big volume and oh, yes, what a genius I am. But, you know, in the real world, you're like, that looks a little bit heavy. Okay, well, maybe there's one more step into it. I need to wait for the first green, the second test, or whatever. You get the idea. You know, there's a distinct difference between the front line and the trenches and actually trading and seeing it, having real money on the line, versus going back on your charts and being Mr. Harry Hindsight genius and going, yeah, I'd have got that turn there with size, yeah, no problem, man, that's easy. We all know that's not the case, right? And why do we do this? And it's important because we optimize. It could be about the performance, right? And as I said, you could be that you want to improve the performance. And in reality, it's probably because you want to make more from it, if I'm honest. But let's say it's not working for you. It's often about avoiding what we call emotional exposure, i.e., it doesn't feel like you're doing anything meaningful when you just stick with a strategy and you go, I'm just going to trade it and see what happens. It doesn't feel like you are earning the right to make that strategy effective, if you like. You know, as driven human being, as ambitious human who's in trading, you always feel like, well, if I optimize it, then I'll optimize it and it'll suddenly work and I'll feel good because I've created it, I've done this. And it feels like a safer thing to do and a more pat on the back thing to do than actually just executing the trade. And, you know, if you're constantly tweaking, you constantly get the feeling of, we've all been there, right? You have some poor performance, you sit down and you go, well, if I adjust this, then I wouldn't have that. That would have fixed that. And what happens? You feel good. You feel excited about the week ahead. You're like, I've adjusted that now. But then you've made an adjustment based on prior price action, and now you trade it and you kind of struggle again. And you go, oh, well, I'll tweak this and adjust this because that will fix that. Okay, and you feel really good. And all you're doing is you're making yourself feel good by doing stuff you don't need to be doing. In reality, you need to be soak testing the strategy, trading the damn thing for a period of time, and then going, hey, how did it perform under these different conditions? Is it something I want to repeat for another quarter? Is it not? This is exactly the thing where Henry came up with these 40 trades idea many months ago, which is a concept we've taken on board now with a lot of the trading stuff we do and thinking about things is do 40 trades with one setup. Don't meddle. Don't screw around. Don't try and be smart about it. Just do 40 trades. It's difficult. Traders want to tweak, want to adjust, want to adapt. And you put it under the guise of, you know what, I'm smart, I've got high IQ here, I'm adjusting to, and actually it's often fear because you don't want to just do the simple, boring thing of just executing the strategy, right? And it gives you an illusion of control. I'll adjust, I'll tweak, I'm in control of this. And in reality, we're not. There's always going to be the gray area, we're not. All right, talking about strategy hopping and disguised as learning, same type of theme here, and we're getting into the weeds. We're getting right into the thick of it, boys and girls. This is the deep, dark stuff of trading that if you can figure out, often, you know, unlocks a few different ways of thinking. Traders will very often strategy hop, and they will wrap it up as I'm learning, I'm improving, and that's fine. That's fine to a certain degree, right? You want to improve, you want to test, you want to, Peter often says this, he says, listen, try different strategies, but it should be under a strict regime where you say, okay, well, I'm trying this, I'm trying that. That's growth, that's learning. I'm trying this strategy. And then though, after that, which most people are now, you've got to stick to something and you've got to say, hey, do you know what? I know this can work. Buying pullbacks in an uptrend, I can see this works. I just need to be good at it and understand the nuances and understand the timings and understand when I don't get involved, when I do get involved, and become an expert at that. But it's so much easier for a smart person to go, well, you know what? I'm going to try something else. I'm going to do this. Because when you learn a new strategy, you feel smart, right? You go, you get the dopamine hit. Oh, that's great, that strategy. Yeah, that's really good. And you get all excited and confident about it, and then you trade it, and you're like, well, it's the same thing, man. I've got the same challenges I've had with my other strategy. I still need to learn how to deploy it in the right conditions. I still need to learn when to press the throttle. I still need to learn how to sit through stagnation and draw down. It's no different. There's no holy grail out there, as we know, but we strategy hop because we think, you know what, I'm smart, I'm learning, I'm growing, I'm improving my edge, and often it's not. And so what this looks like often is I'm just expanding my playbook. This one fits me better. And there's a difference. There's a clear difference, right? I don't want to contradict myself here. If you are going down a rabbit hole where you say, you know what, I just don't believe mean reversion's right for me for whatever reason, by all means, pivot, make an intentional adjustment, and start trading momentum, start trading news, start trading trap, whatever it might be. But don't fall into the trap. Of course, wherever you are in your trading, this is a different message. If you're brand new and you're learning, you learn as much as you can. Your job is to just take in information and make a decision about where you're going to pursue for the next 6 months, right? 6 months, a year, whatever. But if you're developed and you kind of know a lot of stuff already, you've got to own a direction. You've got to say, you know, I'm not going to be hesitant. My North Star is this. I'm becoming this type of trader, as we talked in January. I'm a momentum trader only, right? Expert at that. What do I need to do to become an absolute expert at that? And we talk about half-built bridges. You never get a strategy that gets over the other side. Think of a cliff here, trying to build a bridge to get to the other side, where all the goals are, everything that you want. You have a strategy, half gets there, comes back, half-built bridges, all these half-built bridges. And the hardest bit is the last piece, where you can actually, yeah, I'm pretty damn good at trading momentum ignition, but I know when to deploy it. I know when not to deploy it. And once you've mastered that, then you can kind of explore a secondary strategy. And it feels so virtuous. Learning feels, I'm learning, right? But you end up learning something completely different. You end up going down a different rabbit hole that just takes you away from the skill set you've developed. If you're learning to be a momentum trader, a trend trader, momentum ignition, all this type of stuff, and then you start going down a rabbit hole and watching a YouTube video about some sort of mean reversion, it's a different skill set. And you're just applying this friction where you go, I feel great because I've learned it, but you're just not allowing yourself to flourish and mature, and not allowing the discretion, the judgment you've built up watching trends, watching momentum come into its own. You just go, whoa, come back, grab yourself by the collar, yank you back and go, actually, now we're kind of trying to find out when things are reversing. You're like, oh, geez, yeah, okay, fine. No, it's not working, coming back here. We're actually going to try scalping now. And you kind of not letting yourself, the judgment and experience grow and help you and support your trading. New strategies offer hope. You think, new strategy, fresh start for me. I'm going to carry on and do this. Again, distinct difference from being intentional adjustments. A novelty resets emotional pain. You know, if you listen to any business podcast, I like listening to kind of podcasts from kind of serious business people, and they say all this all the time. Like, the biggest issue you have with entrepreneurs, and we're entrepreneurs, right? We are here. We're on our own thing. We're trying to make our own decisions and make money for our own decisions, right? You could say we're entrepreneurial, absolutely are. That the novelty resets emotional pain. So, you know, if you think about people in Silicon Valley, they have a startup, they pivot to something else. You know, people say that's the worst thing to do because the novelty, the idea of a new idea, the grass is always green on the other side. We heard that phrase so many times. Same in trading. And that's why they struggle, because they're sometimes doing this. I'm building an app for someone. Oh, actually, no, I'm building a service-based business that does this. Oh, no, what I'm doing is I'm developing this. I'm developing this material. And that novelty, they're excited and they get going, but it runs out after a while. And the excitement and novelty of starting to trading has probably worn off. And you're now in the Dunning-Kruger where you're kind of like, this is tough. This is bloody tough. But that's where you make the breakthrough, and you've got to resist the urge to switch and go to the shiny object syndrome of, mean reversion looks good, or that looks good, and break through and become an expert of what you've chosen to do after you've done it with intentionality. And the thing is, well, you got to, final thing on this is, you have to admit that you haven't stayed with anything long enough to get good at it. There are traders out there trading a myriad of different strategies, right? A myriad, a complete different selection. But the one thing they've done is they've just become very good at that one thing. And every time you strategy hop, you reset. I just said you reset stuff. I said grab them by the collar, that analogy of I'm getting good at momentum. No, come back. I want you to get very good at spotting these reversals. You can't get true mastery then, because your context familiarity changes. You're seeing different things. Your pattern recognition changes. The intuition you've built up for seeing momentum now is like, well, I'm not trying to do that. I'm trying to see momentum stops. Okay, and your brain's trying to reframe stuff and what have you. And again, there's emotional calibration potential as well if you're trading different strategy and different style, right? So you want to get to a point where trading is pretty boring. And I say boring, and we should put commas around that, because I think I enjoy trading when even it's a quiet day and not much is going on and maybe there's no trades. But just if you're like me, you like looking at the markets, right? So maybe boring is not quite the word, but you don't want to be dopamine hits and like adrenaline pumping and, yeah, man, I'm going to smash this thing. And I mean, it's not really what you want to do. You want the repetition, you want the intuitive nature, you want to kind of feel relaxed and calm and confident about, how you're trading. And the boring part of it is is really where you kind of get the growth, so to speak. Okay, let's run through these last few bits. The illusion of market adaptation. So the markets do change, right? But it doesn't mean you have to constantly adjust stuff. Again, being intentional about adjusting within a framework and saying, okay, I need to make a little tweak to my exit because I feel like I'm leaving a lot on the table. My MFE is quite high. I'm leaving a lot on the table here. I need to adjust it and adapt it. And you're not doing it. You're doing it because of a justification as opposed to just, well, the market's changed, we're going to adjust and adapt. And sometimes that strategy doesn't work in this market, so you just don't trade it, right? So just consider, don't throw everything away. So you know what, it's not the right time for this. We're not getting the momentum we used to have. That's so fine, don't blow it, throw the whole thing away, file it away, and bring it out when the conditions are right again. You don't have to change the whole framework entirely. And often we do this where we go, oh, new strategy, I'm super excited. You get draw down, the down frustration creeps in, you abandon the damn thing, and then you go back to another strategy. And all that experience you've built up, as again, I repeat myself a little bit, but you kind of, every time you pivot and adjust and go to another strategy, you don't get the deep learning and mastery that you get when you stick with something. And often, if you just stick with something through thick and thin, you will know when it works great. You will know when it's not that great. You will know when to press the throttle. You will know when not to press the throttle. You know, there are traders out there who have fantastic quarters and then sit and do nothing for a quarter because they've mastered the art of a specific type of market regime. But the fact that they're putting quite a lot of risk on the table there in that quarter means that actually the year is pretty productive. So there's different ways of doing this stuff. And the final thing here, guys, is that it's all about screen time. And I don't mean sitting there like a zombie staring at stuff and making yourself blooming, your eyeballs exploding and burning green candles into your retina. I mean that it's all about experience. And going back to the point I made kind of in the middle with, you know, if you can do everything you can to develop your discretion, your discretionary ability, should I say, your judgment, your experience, the more you do that, that just compounds. But focus it in one area. Do the intentional stuff that we've talked about before, of like making sure the strategy aligns with you and making sure it aligns with your lifestyle and all the stuff that we've talked about many times before. Your beliefs, we talked about the beliefs. We talked about, you know, whether you're going systematic, we're doing this, that. Once you've done all that, then commit and say, I am a mean reversion trader. This is my strategy. I'm going to trade this, and learn it, and just put the screen time in and see the different nuances and see the context and learn and fail and get up and struggle and have drawdown and stagnation, have great months, have more, and just over time, you can't help to become good at something when you just focus your energy in one place. All right, I will take some questions, guys. Quite a deep one tonight, I admit. We were doing quite deep this evening. We'll come back next week, maybe a little bit lighter, but hopefully this stuff helps. I mean, you know, I think when you think of trading through these different lenses, often the light bulb goes off, especially if you kind of, you know, you've got some experience behind you, you're developing trader, things aren't quite gelling. You go, you know what, that makes a lot of sense. And maybe a lot of things I say, you can think about and say, well, actually, you know, that makes sense. Why I did this, why I did that, why I didn't get the results I wanted here. There's never any guarantees in trading, but I think you can fast track things by being more intentional about it and taking on board some of these things that we shared this evening. All right, ladies and gents, if you haven't checked out my website, please do, tradersmastermind.com. Do you know what? Hopefully you've been able to see that, because I just, my slides froze. I think that was just my slides because no one's gone. The slides are frozen, the slides are frozen, the slides are frozen. Yeah, no, we're okay. Okay, you want to check out my website, please do, tradersmastermind.com. Also, check out Pepperstone. Thank you for allowing me to host this with you guys. Okay. Anthony says, hello, Mark. I've been focusing on my R ratio lately. I wait for good entries that give me a fairly tight stop loss where the trade premise would be invalidated. Then even if it isn't a big intraday move, I still make a good profit. It also seems like it can be wrong multiple times as long as my position size stays the same and my R ratio is solid. What's your take on this? I think that's great. If that works for you mentally, and you say, hey, do you know what? I like that. I like the fact that the structure's got to suit you. And I'm just thinking through some of my mind, Anthony, so forgive me if I'm just kind of thinking of different scenarios here. The structure's got to suit you, and you're focusing intentionally on the R ratio. Good. Let me move you over here. You're focusing on that R ratio, which is great, which is really, really good. Okay. And you're putting a stop loss in a place where price would be invalidated. Perfect. That's exactly where you should put the stop loss. Great, 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 great. And the idea is that it's tight enough that you make money if you don't get the big move. And this is a way of trading intentionally where you said to yourself, hang on a second, I could be wrong, but if I'm right, it's going to make up a lot of the losses I've had. I think if that suits you, you go for it. There are some traders it doesn't suit, and they say, you know what, I really don't like taking losses, so I want a higher win rate. And in actual fact, for you, it sounds like you're prepared to sit through that. There's a trader, Rushi, I'm not sure if he's on now. I did an interview with him in a podcast, developing trader. He went from part-time to full-time. You can have a look at my podcast on that. He trades a strategy is very much paper cut, paper cut, paper cut, paper cut, paper cut, bang, 6R, 7R, 10R, right? So, yeah, I think that's a good way of doing it. And I think that for many people, that's exactly the way they like to trade. And you've got to be comfortable with it. If you're comfortable with it, that's great. Richard says, thank you, Mark. Listening to your reasoning is making me a better trader. Appreciate that, Richard. Thank you. Feedback from Alison. Fantastic. Thanks, Mark. Thank you, Alison and Lee. Good session. Thank you, Beth. Thank you so much for the useful webinar, Mark. It will definitely help me focus on what I need to improve. I'm glad. Mark, I agree some strategies could be above your skill level. Yep, and do you know what, Mark? I say that with the cut from the right place, right? Not necessarily aimed at you per se. I know you've got some relatively decent experience in the markets, but there's some. Listen, if someone said to me, "Oh, I want you to go and start trading an iron condor strategy," I understand the concept of options. I understand what options do. I understand what an iron condor is. But I would need to upskill my understanding of the gamma and the theta and all the deltas and all the Greeks, should I say, and really to understand the strikes I'd pick. To understand, I wouldn't have the skill level. That's okay because I don't really want to do that. But the point is, you have to appreciate where you are as a trader, and that's why you can't do everything. You choose one thing and you go deep at it, and you go, right, I understand price action and supply demand. I like trading traps. I do, you can go off elsewhere, and all of a sudden you're going, well, I just don't have the skill levels to be trading these iron condors effectively. I'm going to have to put in some time. It's going to take me at least a year to understand how to pick these strikes and this, that, and the other. And sure, there's going to be some transferable skills that go along with it, but you get the point, right? And so putting the ego to one side and saying, you know what, maybe that's just not the skill I have yet. So my expectations can't be too high. No reason why you can't do it and push it and learn and improve. But at the same time, it's kind of understanding, yeah, you know what, I need to put some more screen time in. So thank you, Mark. Paul says another interesting session. Thank you. Always thought-provoking. Appreciate you, Paul. Appreciate the feedback, guys. I really do. It's very kind of you. Andy says, thanks very much. Again, Mark, lots of content. When you're keeping a strategy simple, do you simplify by standardizing exits too? What's your go-to exit method that works across trades without constant discretion? Do you simplify by saying, I don't standardize my exits. It depends on the strategy that I'm deploying. Now, sometimes it might be on a level touch. If it's an A to B type trade, and I think there's a high probability of that, I don't expect much from it. I just want to touch it. The level might be touched, or I might have a bit of discretion and say, if the candle's strong, I want to sell into that strength. Other times I might be trailing because I believe there's a good trend here, and I'm happy to trail the thing, and I'm happy to give a chunk back because I believe there's more to come. I think you have to adjust and adapt to the strategy. However, the conditions. However, if it makes sense for you to standardize your exit, i.e. I come out at a certain time, I come out at a certain close of a candle, I come out when a level's touched, then do that. I think that creating more cognitive load for yourself in the middle of the trade, whether it's the entry or the exit, is never a good thing because you want to be focused on doing, one thing at a time. Samuel says, I've heard it suggested to have 3 go-to setups, for example, with power reversals, pullbacks, etc. Does it count as one setup for long and short? Or would there be 2 separate setups, i.e. bull pullback and bear rally, 2 setups, or 1 in 2 directions? Samuel, good question. Now, I'm a bit of a funny trader for this. I think that you know what, I'm going to say I know. Rarely say stuff like this, but the difference in price action to the downside is often different to the price action to the upside. With one caveat, Forex, very different because you're trading a pair, right? But if you're trading an equity index like FTSE, NASDAQ, Dow, DAX, any of the others, downside action is much more urgent because most people are long, right? Most people are invested. And so there's the fear element there that you don't get often with the upside movements. Sure, there's some shorts that get trapped and it creates an element of fear, but the urgency is a lot different to the downside. So I believe that the setup should be treated individually because the nuances are very, very different. Now, if you're trading Forex, ignore everything I said because you're trading a pair and it doesn't really matter what you're trading one against the other, it's a ratio. But if you're trading anything else, I think that the strategy should be separate for shorts and longs because the nuances are different. You know, shorts, very often you get those face ripper rallies that then come back and reverse. Longs, you don't often get that. You get the consolidation, you get the backfill, you get the congestion, maybe eases lower and then spikes back up. It's a different flavor. So I would say, and some people just like to short only. Like I only like to short because I like the urgency behind it. So briefly, I would suggest that you have your three setups, but include each individual, one for long, one for short, that's two. So if it's the same bull flag, bear flag, that's two different setups. If it's pullback to a breakout level, that's two different setups because I think the nuances are slightly different. But that's a good question, Samuel. That is a good question. My podcast, what is your podcast called? Samuel says. This thing is freaking fucking flocking. I said, nothing, say anything else. Well, I don't even know what flocking means. What's your podcast called? It's Traders Mastermind, Richard. If you go to my website, tradersmastermind.com, all one word, check it out there. There's a link to Spotify. It goes out to, you know, all the stuff that you kind of upload it to one thing and it goes out to Apple and Spotify and stuff. If you put in Traders Mastermind, you can have a listen there. And if you, I think I mentioned the Rushier conversation, developing trader Rushier, great guy. I think it's full-time to part-time or something. The episode is called, I'm sure you'll find it. 40 reps builds edge, it does Lee. Thank you, Toby, for your feedback. Great and very insightful as always. Mark, do you think there are some questions we can ask ourselves that would tap into what we really believe about the market so the strategy we choose and test aligns with our beliefs? There probably are some smart psychologists who would come up with great questions like that. I think for me, it's looking at the chart and going through and saying, how comfortable are you taking something? How scared are you? Scared, very common, is not like, you know, how comfortable are you taking it? How confident are you in taking it? You know, if I said to you, Toby, right, listen, mate, here's 250K. You've got one shot to get a 4-hour trade. What's your setup? And that's it. You got one shot. I can't take multiple trades. I want you to make £1 million out of this. Here's 250. Then you go, well, actually, I really like the pullback trade. I really like this trade. And then you kind of iterate on from that. And then I say, well, what trades would you definitely not take? You know, so you can start with just these simple questions and also using stuff like ChatGPT to help you think through things. You're just being honest about, you know, and self-aware about some of the answers to the questions. Marinus says, very good, Mark. Another excellent topic. Thank you, Marinus. Great thoughts and comments. Thank you. Appreciate you too. Lee says, same as building muscle memory in the gym. Absolutely, mate. And it's the reps, it's doing the stuff, but it's also giving yourself opportunity to be productive in the gym. You know, if you're going every day smashing the hell out of your chest trying to get to your bench press personal best, you've got to do yourself with damage, right? Muscle's not going to grow. Same with trading. You've got to have the action of doing the trading and stuff, but you've also got the reflection, the rest, so that your decisions can be on point and stuff. And you're probably saying that, Lee, because last time I was talking about 100 kg bench press, which I'm not there yet. Give myself a few more weeks. And I need to lean off a little bit. Chris B, great video as always, Mark. Thank you, Chris. Nothing cuts me up more than trending market, working on understanding of context and bias. All your content helps tons. I'm pleased. Thank you, Chris, for your feedback as always, mate. Justin, thanks, Mark. Awesome content. Thank you, Justin. Richard, hi, Mark. Thank you again. Great session. Appreciate you and appreciate you. Minhart, not a question, just a huge thank you in capital letters. Thank you all, ladies and gentlemen. I appreciate your feedback. I genuinely do. It means a lot, and I'm glad that it's helping you in your trading and long may it continue. If we keep moving forward a little bit more, a little bit more, a little bit progression, one step, one step, one step, sometimes a step back, you go another step, keep going, then you just keep progressing. You're going to be a different trader than you are today, in 3 months, in 6 months, in 1 year. It's just the way it is. It's going to happen. So just keep pushing, keep moving forward, and hopefully I can add value to your journey along the way. Thank you, Lana, as well, for your feedback. All right. 5 minutes over. I got to get better at my timekeeping, but I appreciate you all. Thank you, Errol. Take care, everybody. Good. Bye. See you next week. Same time next week, 7 p.m.